Hey guys, it's Q here from Wealth Awesome. Today I'm going to talk about my favorite ETF and probably what I have most of my holdings in. It's a S&P 500 dividend ETF, which is a bit uncommon because you typically don't get much dividend yield with the original S&P 500 ETF. And yet this is an ETF I don't see anybody talking about. So we're going to go through the holdings, the performance, and why the S&P 500 dividend ETF, also known as SPY-D, is a really interesting choice. Now, for Canadians, this doesn't trade on the TSX, so there's no Canadian version of it. Again, I feel like it flies under the radar. But once you take a look at it, you'll see what the benefits are, and maybe this is the right choice for you. The S&P 500 or SPDR High Dividend ETF, it mimics the S&P 500. However, it's just the top 80 stocks that have high dividends. And so what's really interesting is when you start to compare this to the S&P 500 ETF, you'll see that, first of all, it's not as popular. The S&P 500 ETF has like $625 billion in assets, where the S&P 500 high dividend ETF has almost just 7 million, almost like 10%, right? Which is kind of crazy. And if we go into the returns, you'll see that, I mean, we can look at it over the chart here. So, the S&P 500 over the last 1 year, it's about 29% growth, 5 years, 88% growth, all time, lots of history, really crazy number there. Now, if you take a look at the S&P 500 dividend ETF, you'll see that in a way it's somewhat comparable over the 1 year, and over the 5 year, it's a little bit less, but still really strong growth. And so let's dig into that a bit more. If you go to the analysis tab here and we compare the returns, so let's look at this versus the S&P 500. Here you'll see that obviously there's not such a big difference between the 1 year return for the S&P 500 and the NAV total return, which includes dividends reinvested. And so as an example, over the 1 year and 3 year, let's look at that. The total NAV return is 32 and 32. If we look at this S&P 500 dividend ETF, you actually see that you actually beat it over the 1 year with the dividend reinvestment, and over the 3 years, it's actually quite similar. However, with the holdings, you get a lot less volatility. Now, to create a S&P 500 dividend ETF, as you can see, it's basically the largest cap top 80 dividend paying securities. And so look at the dividend yield. It's 4%. And the dividend yield for the S&P 500 ETF is 1.19%. So this is basically almost 4 times the dividend yield, but you also have a sizable amount of growth, right? So, and you're getting a little bit less volatility because these tend to be more stable players. If we go into the actual holdings and take a look at the differences from a sector breakdown, you'll see that, so this is for the S&P 500 core ETF. It's overweight technology, electronic technology, financials is next. And this is because, of course, the top holdings are NVIDIA, Apple, Microsoft, Amazon, Meta, Alphabet, right? Basically the FANGs. And the thing with all of these is they don't pay a dividend yield. So, of course, if you're looking for just straight up growth with the market, S&P 500 all the way. For me, at this point in my life, I'm looking for growth, but I'm also looking for some stability and some income as well over the long term. And so if we compare the holdings and the sectors, here you'll see that in the S&P 500 dividend ETF, it's quite core finance, utilities, consumer, and some of the companies here are maybe companies you don't affiliate with being, core to the, or maybe not being as popular is a better way to say it. Kellanova, Kinder Morgan, Morgan Stanley. If you take a look at any of these, you'll see that, obviously they have strong dividend yields, healthy dividend yield of 4.14%, strong EPS, strong earnings, where some of the other ones might be kind of getting caught up in different growth cycles, which is great from a market perspective. But for a long-term investor, of course, there's a little bit more work that we need to do. And so, yeah, in summary, I think that the S&P 500 dividend ETF, it's a really interesting approach to this high growth with good yield. And so if we actually start to take a look at the income that comes in on a yearly basis, it ends up being quite significant, right? And so you can start to get paid while having good performance and having lower volatility using this ETF. So take a look at it. Again, it doesn't trade in the Canadian stock exchanges. So if you're willing to take the currency risk, maybe it's a good approach. But also for the American audiences looking in here, I think this is definitely one of the most underlooked ETFs in the world today, and something that I think is a really, really, really interesting thing to take a look at.